Hi everyone, my name is Ruben Bala and welcome to Market Munda. In this video, what we're going to be covering is honestly some really important advice for beginner investors, intermediate investors, and advanced investors. Usually beginner investors don't even know this rule. Intermediate and advanced investors do know this rule, but they actually just tend to forget it, right? As they get more knowledge into the technicals, people just tend to forget this really basic rule. So today, what I'm going to be doing here is I'm going to be simply telling you what is the number one rule that you should play by when you're investing, why you should follow this rule, and examples of my successes and failures with this rule. You know, there have been times when I forgot about this rule. It cost me hundreds, thousands, tens of thousands of dollars. When I did listen to this rule, it made me hundreds, thousands, and tens of thousands of dollars. So I'm super excited to get into this rule. And before we start, make sure to give that thumbs up, subscribe to the channel, and comment. You know, it's gonna really help out. This is the second video. It's gonna help out the algorithm, so really appreciate it. So thank you so much. So now let's get started. What is this rule? This rule is basically buy for the long term. You have many sort of trading styles, let's call it, right? You have buy for the long term. You have swing traders. Basically, if you don't know what swing trading is, it's basically when a person will buy a stock, let's say they buy it, and then they'll sell it after a week, a month. So it's literally meant for let's say a month to 9 months, you could even say 12 months. So basically less than a year. Day trading is basically when people just invest and they literally trade every single day, right? They buy a stock, they sell it the next day, they buy another stock and they sell it within the same day or the next day. Now, with this sort of methodology, my preferred method is buy for the long term, right? With short term, it's actually really gambling, right? You don't know what it is day to day, right? With swing trading, you really have to kind of look at the technicals and everything, versus long term, it's just easier if you just do your research. And I'm gonna explain to you why it's so beneficial compared to those other two methods. First of all, if you look at this screen, I actually did an Excel for all you day traders out there. So just assume this basically says, okay, you have $100 and every day you lose a percent, you make a percent and then you lose a percent, right? Because again, day trading is just gambling at the end of the day. You don't know if you're gonna win, you don't know if you're gonna lose. So let's assume every day you win and then every other day you lose a percent. So you could see that you start off at $100 and then by day 29, day 30, you're at $100.85 and you're at $99.85. So within the span of 30 days, if you daily trade every single day, you don't make that much, right? If you end on a positive note, you're gonna end up with maybe 0.85% gain based on this calculator, right? And then if you end at a loss, you're gonna end at a negative 0.25. And the more you play, the less gains you get and the more losses you get. So day trading is really tough. And I really wouldn't recommend it. And in the long term, you don't even get that much money based on this calculator. Now, this long-term strategy only really works for growth companies and it really works for established companies, right? Just because of a couple reasons. One is because growth companies, they're growing, they're aiming towards profitability, right? And they have a future that they're aiming towards, to get more money, to be more profitable. Established companies, they will grow in the long term just because of productivity, innovation. They're gonna try to beat their competition. So they want to get more business. So they are essentially going to grow and grow, right? But this only rule works if you do your research, right? If you do your research at these growing companies, at these established companies. So that's a thing to know. Now, why is it beneficial for you to invest in the long term? Now, I'm gonna say 5 specific reasons. Number 1 is because the stock market always goes up, right? If you look at this Dow Jones, you can sort of see the chart over the years and you can sort of see that it's always going up. You can see it dips here and there just because of the crashes, but you can see overall consistency. If you put your money there over a 40-year span, that's when it's been there till, you can sort of see that it's just going up and up and up. All right, not only the Dow, but the NASDAQ. You can sort of see the NASDAQ, right? It's at an all-time high. You can also see the S&P, historical annual return. So it's not like the chart that I showed you before, But you can sort of see that there's very few years that like the S&P actually gave you negative returns. Over here, you can see that it's just up and up and up and positive. Some years give you really high and some years give you really low. But the thing is that you still earn money, right? So it's still going up in the long term. Now, why is this happening, right? Why does the stock market go up in the long term? The reason is, and this is actually Warren Buffett's explanation, so I'm going to read this out, right? In his recent letter, Buffett says American GDP per capita is now about $56,000. In real terms, that's a staggering 6 times the amount in 1930, the year I was born, a leap far beyond the wildest dreams of my parents or their contemporaries. US citizens are not intrinsically more intelligent today, nor do they work harder than did Americans in 1930. Rather, they work far more efficiently and thereby produce far more. This all-powerful trend is certain to continue. America's economic margin remains alive and well. Now, what Warren Buffett essentially means, in that article that I read, it basically has to do with 2 factors: improvements in productivity and innovation. So productivity is because, as the human population is growing larger and larger and larger, we essentially as a society become more productive. There's more resources, there's more resources, we get to do more, we spend our time more valuable, right? And this leads to growth at the end of the day, right? Innovation is really important because, as we continue to grow as a society, we're making more technological advancements, we're making lives easier for us. 40 years ago, car was there, now we're almost gonna be at the level of autonomous cars. The world is changing, right? And it's changing very, very rapidly. And this basically innovations allows for disruption in many different industries. So because we're always going to have societal growth and we're always going to have societal innovations, right? The stock market is always going to grow because companies are going to get value from those 2 things. This is like the presidential election time. We had the March crash. I want to stress out that do not be afraid of crashes. If you are buying for the long term, you cannot be afraid of crashes just because if as a long-term investor, you're going to go through multiple crashes. I've been through one crash. I've been to the March crash. It's scary. Don't get me wrong. It is scary. But again, you got to have faith in the research that you do. You gotta have faith in your stocks, and you should look at that crash not as a scary moment, but you should look at it as more of a buying opportunity. This is the time when the market has crashed. All these stocks are really down, so this is the time where you could put your money. But again, if you already have money invested in the stock market, don't fret, because again, if you look at these charts, it's gonna grow up, right? It's gonna go up. It's just gonna take some time, but overall, you can sort of see that we have recovered and we have done better. Number 2 rule is that it really, really builds the right mindset. If you invest in the long term, it makes you do your research on the companies you want to invest in, right? My long-term aspect is more than 3 to 5 years, right? Whenever I try to buy a company, I look at the future 3 to 5 years out, potentially more, but I try to look within that range for now. And then basically, in order for you to invest in a company 3-5 years out, you really have to understand the business model. You really have to understand the business model. You really have to understand the leadership. You have to understand their vision. You have to understand, the metrics of that industry, and you need to understand their competitors. You need to understand their special sauce, right? So it makes you do the research. It makes you look at their financials. It makes you look at, investor presentations. And before investing, the business, right? If someone asks you, how should I invest in Apple, right? Why should I invest in Apple? Sorry. Then you can be like, okay, XYZ reasons. I know the business model. I know their financials. I know the leadership. I know the products that there are. You are basically like a representative of their company if you've done their research, because those are the best investors. 3 is honestly just because the common man, you and I, we're casual investors, or I like to look at myself as someone that's invested in the stock market, but sort of as a casual investor. I do a bunch of other different things, right? So I can't look at my Robinhood. I can't look at my Fidelity account every single day, every single morning, worrying about, okay, if the stock market's going up, stock market's going down. And to be honest, I did day trading for a little bit, right? And even swing trading. And I was so anxious, right? I was so anxious just because, oh my God, my money's going up, my money's going down. What should I do? What should I do? Right? There was just so much stress. There was just so much anxiety. And I really couldn't focus in on other aspects of my life. When I really focus in on long-term investing, I put my money there. If it goes up, that's great. I'm like chilling. If it goes down, I'm also chilling because I know I've done my research and I'm confident in my decisions, right? So, and to me personally, and I feel like to a lot of other people, if you invest in long term, you'll be a lot like sane mentally, right? It'll just be so much healthier. It's good for your mental condition. So it's just nice to not stress and not be anxious in that manner. Right? And then 4, it's honestly just so hard to time the market, right? The market goes up, goes down so often, right? In March, if you looked at the big crash, the Dow went to 18,000, right? Then people were saying, okay, I want to wait till the Dow goes to 15,000, then I'm going to buy, right? People try to time the lows and the highs at the exact moment. And because of that, they miss their opportunity, right? They're like, okay, I'm just going to wait. I'm just going to see what happens, right? But they don't put their money, even though they know there is a good opportunity, because people get greedy at the end of the day, right? If you see an opportunity, if you know the market could potentially crash, right? Just invest, right? Just invest because in the long term, it will go up, right? And honestly, if you could time the market, you would essentially be the ultimate fortune teller. Like honestly, if you time the market, please just open your firm. I will give you my money. You handle it for me. But the thing is, a lot of people can't time the market because you have to be a fortune teller, right? And no one is a fortune teller. You don't know what the stock market can do. It could go up, it could go down, it could go sideways, swirly, swirl. Like you have no idea, right? You just kind of have to go along with it and see what happens, right? Because even for an individual company, you don't know if they're going to have really good news the next day. They could have terrible news, right? So again, you can't time the market. So I want to get people out of that mindset. And if you invest in the long term, you're not going to be timing the market, right? If you invest in the long term, you're not going to be looking at, the stock is $1 up, or it's a few pennies up, or something like that, right? You're going to invest in the long term, and that's it. It just makes life so much simpler, right? And the 5th reason is honestly tax, right? When you sell a stock, it is accounted as a capital gain, a capital asset, right? So if you look at this slide, right, the key takeaways from this article is when you sell a capital asset for more than you purchase, the result is a capital gain, right? Short-term capital gains result from selling capital assets owned for 1 year or less. So if you hold a stock and you sell it within a year, you will be taxed on a short-term capital gain. If you hold them more than a year, you will be taxed on a long-term capital gain, because it says long-term capital gains result from selling a capital asset owned for more than a year. And now if you look at the chart, you can sort of see that over here I have long-term capital gains, and in the next slide you'll see short-term capital gains. But you can sort of see that long-term capital gains, just 0, 15, 20%. And you can sort of see for a single, they have to pay 0% up to $40,000, which is great, right? 15% if you earn around $40,000 to, let's say, $435,000, which is a big jump, right? And then 20% is over $434,000. So in this range, if you're a single, or even if you're married, most people either have to pay 0% or they have to pay 15%, which is actually not that bad if you look at the short-term capital gains, right? Because short-term capital gains, it's basically put into your ordinary tax bracket, right? And there's they have essentially many different brackets, but most people essentially have to pay so much. You can sort of see that there are if you have 0 to 9, let's say 10,000, you have to pay 10% of that, right? And 10,000 to 40,000, you have to pay 12%, right? And then 22%, 24%. And it just keeps going up and up and up, right? And there's just so many different brackets. So the thing is that you can sort of see that if you play for the short term, you're going to have to pay more and more and more and more taxes, right? I don't know why I put 5 brackets. There's many more. There's 1, 2, 3, 4, 5, 6, 7. Probably a typo. But you can just see that there's just so many brackets and you have to pay the government money. Who wants to pay the government money, right? You want to keep their money to yourself. So again, that's also another benefit that a lot of new investors don't really look at, right? So you essentially will save a lot more money in the long term if you follow that rule and you invest in the long term, right? You can make better decisions, you can save more money on tax, right? And you'll just have like a better mental mindset, right? And honestly, there's been times when I made mistakes and I invested in the long term, and I want to share that with you, right? My example, so you can sort of see that, even though I am in the stock market, I also have made this mistakes. But, going forward, I do invest in the long term and it has paid out. So example 1, Amazon. I actually bought Amazon around like 2018 when we had a little mini stock market crash, and I got it for $1,500. Right now the stock market's going down, but you can sort of see right now it's at 3,000. I got it at $1,500. If I kept my money, I would have 2x'd my money, but I literally sold out for I think I sold around like $1,800, right? I literally made around, what is it, like a 20% gain or something like that instead of doubling it, which is ridiculous, right? I know Amazon's a great company, but I just was like, okay, I'll just swing trade. And I ended up losing money. Beyond Meat, right? If you don't know what Beyond Meat is a plant-based company. They make plant-based foods. So I essentially knew that this stock was really incredible. I ended up buying this stock for $80. And then essentially I sold it, or maybe around like 120, 115, something like that. And now, before the stock market crash, it was actually 160, 170, and now it's falling to 142. But you can sort of see that I could have doubled my money again. But I only settled for that 20, 30% gain, right? Just because even though I did my research, I was like, okay, let me swing trade. Those were my really 2 biggest mistakes, because I could have literally doubled my money just relaxing. But, I looked at the stock market, I saw it crash, I was like, no, let me sell. Let me just take my profit, right? And, it was honestly a mistake, because back then I just didn't realize that the stock market just goes up in the long term. So you just got to have that faith in your research. After those 2 lessons, I really learned that doing it for the long term is the best. So in my next investment, Tesla. What I did with Tesla, if you guys don't know, the Tesla did a 4-to-1 split. And essentially, with that 4-to-1 split, I ended up buying the stock around like $50-ish dollars, right? And I kept it for 2-3 years. It had its ups and downs, but now essentially it's $388. Back before the crash, it was like I think it hit like 460, maybe 440, right? But if you look at it, that's almost like a 9x return. And I still have it. I'm not selling Tesla, but you can just sort of see that, I've learned from my previous 2 mistakes, and I'm like, okay, I've done my research on Tesla. I'm pretty bullish. I know they can execute. I have faith in their leadership. I know their business model in and out, and, I'm basically, you can ask me anything about Tesla and I can answer it. But, I've done that research and I have faith in it. And no matter if it goes up or if it goes down, even if it goes down $200, I'll just keep buying it. I'm just going to keep buying it because I know Tesla will go up, right? Or that's like any stock in general. So that's kind of like what I've learned, I've shared with you my mistakes, and I hope, you guys can learn from that. And like from your mistakes, people learn, I've learned from that, and I've invested in Tesla, and, I'm pretty happy where I am at right now. And, if you really liked it, please give that thumbs up. Please subscribe to the channel. Comment down below. Love to hear your thoughts and opinions about this. So have a great day, everyone. And, thanks for watching, Market Munda.